Welcome back to another Learn with Hatty. If you've traded crypto in the past few years, you've probably heard two things. One, the Terra collapse was just a failed experiment. And two, Bitcoin magically dumps around 10 a.m. Eastern time every day. But what if I told you a single Wall Street firm is now at the center of both stories? In an 83-page lawsuit with a side quest called Bryce's Secret. Okay, so let's start with the basics. Jane Street is one of those ultra-secretive Wall Street quint firms that makes markets in pretty much everything. ETFs, bonds, options. In the last few years, a ton of crypto. It's also where Sam Bankman-Fried got his start, which already gives this story a weird prequel energy. By late 2025, Jane Street was a major authorized participant and market maker for US spot Bitcoin ETFs like BlackRock's iShares Bitcoin Trust, IBIT. That means when people buy or sell those ETFs, Jane Street is often the one actually buying or selling the underlying Bitcoin, or hedging around it. So when a firm like that moves, it doesn't just make a ripple, it can move the whole entire pool. Now let's rewind to May 2022. Terra USD, or UST, was supposed to be a stable coin, pegged to $1 through an algorithmic design and a whole lot of confidence. Instead, it lost that peg, went into a death spiral with its sister token Luna, and wiped out around $40 billion in value. Terraform Labs and its co-founder Do Kwon went from crypto heroes to defendants, facing fraud allegations over how safe UST was supposed to be. For a long time, the blame story was simple. Terra's design was flawed. Kwon was reckless, and that was that. But in February 2026, Todd Snyder, the court-appointed plan administrator for Terraform's bankruptcy, dropped a lawsuit in Manhattan federal court that dragged Jane Street directly into the origin story of the collapse. According to Snyder, Jane Street didn't just get unlucky during Terra's meltdown. They allegedly had an impossible informational advantage that let them duck out of the way while everyone else got crushed. So now let's talk about what this lawsuit actually says in human language. On February 23, 2026, Snyder filed an 80-plus page complaint in the Southern District of New York, Snyder vs. Jane Street Group, LLC. The suit names Jane Street Group co-founder Robert Granieri and traders Bryce Pratt and Michael Huang. The core accusation? That Jane Street used confidential, non-public information from Terraform to front-run trades in UST, unwind their exposure at precisely the right time, and effectively accelerate the collapse. Snyder claims this wasn't just good trading. It was insider trading and manipulation that hurt Terra's creditors and investors, and he's asking for damages, disgorgement of profits, and interest. The most dramatic part of this claim is a very specific moment. May 7, 2022, in the Curve3 Pool, one of the main liquidity pools where UST traded against other stablecoins. Think of that pool like a foundation of a house. If you quietly pull out a big chunk of the concrete, the whole structure gets wobbly. According to Snyder, Terraform quietly pulled through $150 million of UST liquidity out of the 3 pool without telling the market. About 10 minutes later, a wallet allegedly linked to Jane Street dumped around $85 million of UST into that same pool, the largest such swap that pool has ever seen. The lawsuit argues that by hitting the pool right after Terraform drained liquidity, Jane Street added massive stress to UST, nudging it closer to losing its dollar peg and speeding up the meltdown. So Snyder's point is, you don't time a trade like that by accident, 10 minutes after a secret liquidity move, unless you knew what was coming. Okay, now let's add the human drama. Bryce Pratt. Pratt is alleged to have started out as a Terraform Labs intern, then later joined Jane Street in 2021. Snyder claims that after joining Jane Street, Pratt reopened private chats with former Terraform colleagues, including a business development head and others. and one of those back channels was literally nicknamed Bryce's Secret. According to the complaint, those chats funneled non-public intel about Terraform's liquidity moves, over-the-counter deals, and peg defense plans straight to Jane Street's trading desk. The allegation is that this inside pipeline let Jane Street know when Terraform would move liquidity, so they could time their own UST trades to dump risk or profit before the public saw any cracks. That's what Snyder calls an impossible informational advantage. Basically, playing poker when you can see the other player's cards. Now, before we turn this into a full-blown conspiracy movie, we have to talk about Jane Street's side. Jane Street has publicly called Snyder's lawsuit factually inaccurate and basically a cash grab for a failed project. They deny receiving material, non-public information from Terraform, deny insider trading, and deny that they caused or accelerated Terra's collapse. The firm says it will defend itself vigorously in court, which means we're likely going to see motions, discovery, maybe internal chats and trade records dragged into the light. So far, this is a civil lawsuit. There are no SEC or CFTC enforcement actions against Jane Street tied to Terra as of this recording. One weird side note though, around the time this all flared up, crypto media noticed that Jane Street's official X account wiped its public timeline, which looks terrible optically, but is not proof of anything by itself. Okay, so that's Terra, but how do we end up with people blaming Jane Street for Bitcoin's daily swings? In late 2025 and early 2026, traders started posting charts showing a weirdly consistent pattern. Bitcoin would look strong overnight, then take a sharp hit around 9:30 or 10 a.m. Eastern Time, right as US markets opened. People started calling it the 10 a.m. dump, and naturally CT did what CT does. It went hunting for a villain. Because Jane Street is a major market maker and authorized participant for spot Bitcoin ETFs, a lot of fingers pointed straight at them. Some articles and social posts claimed Jane Street was running a systematic sell program at 10 a.m., pushing Bitcoin down a few percent, triggering liquidations and then scooping up cheaper coins. For example, Yahoo Finance highlighted December 2025 price data where Bitcoin allegedly dropped hard right after 10 a.m., wiping out millions in long positions, and tied that pattern to Jane Street's ETF roll. But more cautious takes, like this piece from Crypto Slate, argue that the evidence for a deliberate, coordinated suppression algo is thin, and a lot of that volatility could come from normal ETF hedging, news, and global flows hitting at the same time. To understand why this 10 a.m. theory sticks so hard, you have to zoom in on how ETFs and market makers work. As an authorized participant and liquidity provider for ETFs like BlackRock's IBIT, Jane Street can create or redeem shares and hedge those positions using spot Bitcoin, futures, or other instruments. A lot of that hedging happens right when US markets open, exactly when many traders notice those morning dumps. Articles say Jane Street has handled very large IBIT flows and has at times been one of the biggest holders of IBIT shares, which means their trades can leave a huge footprint on price action. So even if they're not manipulating in a legal sense, their normal inventory management could easily look like someone hitting Bitcoin with a hammer at the same time every day. The problem is that from the outside, you can't always tell what's legitimate hedging, what's arbitrage, and what might be aggressive directional trading. It all just shows up as candles on your chart. Now here's where the Terra lawsuit and the Bitcoin charts start rhyming a little too neatly for people. Right after the Jane Street Terra suit went public in February 2026, traders started watching the usual 10 a.m. slot like hawks. On at least one key day, articles noted something unusual. No big 10 a.m. dump, and instead, Bitcoin ripped higher, around a 3% move up toward the mid-60,000s. A Yahoo Finance piece and others reported that this lined up with speculation that Jane Street had paused or shut off a 10 a.m. selling algorithm after the lawsuit, based partly on claims from investor Mike Alfred, who said he spoke with a Jane Street insider. Again, that specific insider story is not independently verified, but it poured gasoline on the idea that some switch had literally been flipped off. Other outlets, like coin-focused news sites, pointed out that during this window, Bitcoin pushed towards $70,000, and short trades saw hundreds of millions in liquidations as the market suddenly stopped getting its usual morning beating. Jane Street also isn't the only firm in Snyder's crosshairs. Back in December 2025, Snyder filed a separate $4 billion lawsuit against Jump Trading, another big trading shop, accusing it of secretly propping up UST's peg with hidden support deals, then profiting massively on the unwind. The allegation there is that Jump had special arrangements to buy UST when it dipped, making the peg look stronger than it actually was, and then cashed out when things fell apart. All while regular investors thought the system was working normally. So when you put the Jump case and the Jane Street case together, Snyder's basically arguing that some of the most sophisticated firms in the world had side doors and secret deals around Terra, and they used those to get out while everyone else was trapped inside a burning building. So, what do we actually know versus speculation and Twitter rumors? Here's what's solid. Terra blew up catastrophically, wiping out tens of billions in value and triggering a chain reaction that hit the broader crypto market and even contributed to FTX's downfall. Snyder has filed detailed civil lawsuits against both Jump and Jane Street, with timestamps and specific events like the May 7th Curve3 Pool trades and the alleged Bryce's secret back channel. Jane Street really is a major ETF market maker in AP, and there really have been noticeable 10 a.m. patterns in Bitcoin price action during US hours. And we do have at least one period after the lawsuit where those 10 a.m. dumps seemed to pause and the market rallied instead, which is unusual enough to get everyone talking. Here's what's alleged and unproven. Jane Street used inside info from Terraform via Bryce Pratt and others to front-run trades and hasten Terra's collapse. Jane Street denies this, and the case hasn't gone to trial yet. That there is a literal suppression algorithm systematically pinning Bitcoin down at 10 a.m. every day, specifically run by Jane Street. That's still in the realm of market lore and speculative inference, not hard proof. And that turning off such an algo is why Bitcoin pumped after the lawsuit. That's a story people love, but it's not something anyone has conclusively demonstrated. So where exactly does that leave us? On one hand, it's totally possible that a firm as sophisticated as Jane Street simply traded better, exited Terra risk earlier, and moved ETF flows in ways that feel manipulative but are technically just good risk management. On the other hand, if discovery in these lawsuits reveals private chats, backroom deals, or explicit "we know what Terraform will do next" conversations, then this doesn't just become a Terra story. It becomes a case study in how institutional Wall Street players can tilt supposedly decentralized markets. Either way, you should treat all of this as one data point in your own research, not financial advice and not a verdict. The courts haven't decided anything yet. So I want to hear from you. Do you think firms like Jane Street and Jump made the Terra collapse way worse than it had to be? Or were they just faster, smarter, and a lot less emotional than the rest of the market? And what about the 10 a.m. dump? Real algo or pattern-seeking, brain-seeing faces in the clouds? Drop your thoughts in the comments. I would love to hear what you think. If you learned something today, hit like, subscribe, and share this with that one friend that still thinks markets are fair. Thanks for watching, everybody. Remember, do your own research, stay curious, and keep learning. Have a good day.